Hey everyone, Sean Gander here with Simplify Accounting. Today I'm talking about RRSP tax planning. You should contribute $5,882 towards your RRSPs to optimize your taxes this year. No, don't do that. Honestly, I have no idea how much you should contribute to your RRSPs because it really depends on your RRSP contribution room, your tax bracket that you're in, how much money you have to contribute your cash flow as a family, as a unit. There's a lot of different variables that go into it, and I don't understand your entire financial situation, even if I do your personal or corporate taxes, so I really can't give you an amount to contribute. But what I am going to do is during this video, I'll give you the tools that you need so that you can understand how much you should contribute on your own to optimize those taxes. First off, what are RRSPs? It's a registered retirement savings plan. You can set this up with any bank. You can use a financial advisor to set one up. You can do it yourself with Wealth Simple. There's lots of ways to set up an account. Once that account is set up, you can make contributions towards it and then invest those contributions however you want to invest them. There's lots of different investments, conservative, risky, etc. I'm not a financial advisor. I'm not going to tell you how to invest your money. But what happens is when you contribute to those RRSPs, you get a tax deduction for those contributions. And what that tax deduction does is it allows you to either get a tax refund or to reduce the amount of taxes that you owe. Those investments that are in that plan, they grow tax-free until you start taking them out. And as soon as you take out RRSPs, you get taxed on it because you got a tax break when you contributed. So that's really important to know. That time frame is really important. If you're just going to pull out those RRSPs in a couple of years, then don't use RRSPs. Use something else like TFSAs, tax-free savings account. Tax-free savings accounts are super flexible. I'm a huge fan of them. If you don't own a home yet and you're going to be a first-time home buyer sometime in the next couple of years, use a first home savings account, an FHSA. Those are super good. They're like the best attributes of an RRSP and a TFSA. But we're talking about RRSPs today, so I'll continue talking about RRSPs. The first thing that you really want to understand is what your contribution room is. If you go and look at your CRA Online account or your latest notice of assessment, it will tell you what your contribution room is. But that might not be accurate because if you've made RRSP contributions since that statement, that will be different. So let's say that the statement says, your notice of assessment says that you have $160,000 in RRSP contribution room. Well, if you've made $30,000 since that notice of assessment was released, and then you have $130,000 as a limit, that's a ton of room. If you have that much room, and you have the cash, you probably shouldn't contribute the whole amount unless you make tons of money. The next step, once you know your contribution room, is to look at your tax bracket because that will determine how much money you're going to get back on your taxes. If you look here, I've got some tax brackets up on the screen. These are for Alberta 2024, but if you're not in Alberta, then you can look up your combined federal and provincial tax rates on Google for your specific province. In this case, on the first 16,000 or so, you are paying 0% in taxes. And it doesn't matter how much money you make. You can make $500,000 a year. You're still paying 0% in taxes on that first 16 grand or so. Those incremental tax rates within each of those brackets is what you're paying for the income amounts in those brackets. Any income between the $148,000 and $173,000 gets taxed at 38%, but any income between the $55,000 and $111,000 is taxed at 30.5%. Even if you're in the $170,000 bracket, it steps up every single time. And so what you can do is if you're making $170,000 a year, you can look at this table and see, hey, look, I'm making $170,000 a year. I'm paying 38% on every additional dollar of income that I have until you hit that next bracket. And so if you contribute $20,000 in RRSP contributions, all you have to do is take that $20,000 times the 38% bracket you're in, and that comes out to $7,600 that you would save in taxes. Your taxes would get reduced by that amount. You'd get a refund or a reduction in taxes, and you're happy. Something to consider though is that you might have some other deductions on your personal tax return. Like if you're in Grand Prairie, you have the Northern residence deduction, and that will impact it. Won't impact it a ton, but other deductions that you might have will impact that bracket that you're in. Otherwise, you can go look at your T4. If you understand how much money you made during the year, you can have a pretty good idea of what bracket you're in, multiply that bracket by how much you're going to contribute to RRSPs, and that's how much you'll get back in taxes. So understanding the RRSP contribution that you have, room that you have, make sure you don't over contribute, because if you over contribute, there's penalties and it can be a real pain to fix. Understand what bracket you're in so that you can determine how much you figure you should contribute to get back X amount in taxes and to start building up that retirement fund. And then last of all, understand your cash flow. How much money comes into and leaves your bank account every single month. This dictates how much you can afford to contribute. And a ton of people don't understand what that cash flow looks like for them. I highly recommend going and taking 2, 3, 4 months of personal bank and credit card statements, highlighting them up, throwing them into Excel, whatever is the easiest way for you to categorize them and figure out where you're spending your money. You'd be surprised on what you spend your money on. And then once you know that, come up with some kind of budget, and I'm sure you can find some cash at the end of the day that you can use to contribute towards RRSPs or some other kind of retirement account, investment account, TFSAs, etc. And that'll get you on the way to retirement in the future. Hopefully this video gave you the tools that you need to figure out what to contribute to your RRSPs, and hopefully you can subscribe if you like these videos so that I'm motivated to continue to keep making them. We'll catch you later. Thanks for tuning in.